All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. And yeah, ready for what should hopefully be a little bit of an interesting trading day. And yeah, hopefully it's another smooth session like we had there yesterday, right? Really nice little breakdown. Um, green pretty much right away, right? Good follow through, got out as P&L was increasing, and certainly no complaints. Even though we're seeing maybe or we saw relatively good selling pressure there yesterday, we're not necessarily seeing a ton of enthusiasm, and we didn't really see that pressure sustained for like the entirety of the session, right? It kind of gave us two breakdowns there in the morning, the one that we caught, right? And then there was kind of a secondary move. And then it kind of just drifted higher, right, for the remainder of the day. And so hard to maybe take too much information from that, right? To suggest that it's like a tremendous bearish reversal opportunity or things along those lines. Not quite sure we necessarily established that amount of strength. Like even on an NQ, for example, right? We made a move under 23,200, couldn't close under it, and then implied open here today is back up above that zone. So we have I think what's maybe not confusing, but what I think is annoying about this price action we've been seeing for a little bit is that it has like characteristics of all different types of market conditions, right? So we could argue that there's some characteristics of trending PA there. We could argue that there's some characteristics, right, of like kind of consolidation. And we could argue that there are like characteristics of choppy indecision. So when we're effectively getting like three different narratives, and you could make a case for all three, right? You end up kind of having none of them or nothing particularly interesting. And I think we've been struggling with that just a little bit from a market context perspective. And hopefully, right, yesterday then ends up kind of turning into like that pseudo capitulation type day, where the move happens to the downside there faster than you expect. And then we start to kind of make that next leg or next climb higher, and we get back to having kind of smooth conditions. From just like a quick glance, I guess, so far here this morning, right? ES definitely appears to be the most tradable of all of our tickers, especially here to the upside. And the fact that we're opening up well above yesterday's close price, I think, again, right, kind of gives us that indication of a lack of bearish strength. And if we could get that story to remain consistent here today, maybe our easiest path, right, to getting that then consistent story. The other thing that's we got to be a little bit aware of, there was a fake resignation letter that was kind of floating around social media there yesterday about Powell resigning from the Federal Reserve. Got picked up by a bunch of larger accounts, and yeah, like I'm worried about stuff like that happening more and more often, and just markets not being particularly prepared for that. So yeah, let's just make sure, right, that we're being really aggressive in protecting our positions, because we've seen it already this week. Maybe not necessarily yesterday, but this week we've seen it quite moves aggressively flip, right, or aggressively will change their personality. So really focusing on closing as P&L is increasing, right? Really focusing on not giving back any gains. Just really emphasizing those habits, right? That's going to put us in a good situation, and that's going to be the only way that we can protect ourselves from kind of some of that, for lack of a better term, fuckery that happens on social media. From a economic calendar perspective, right, it's a little bit of a smoother session. Nothing too crazy. Tomorrow's going to be the big one. So should be okay here this morning. So let's get after it. Let's start mapping things out, and let's figure out what we want to do. All right, ES, right? Red candle, increasing outlier volume, gap up, right? Weak red candle, opening up above its previous highs, testing all-time highs, and an implied range of 1% here today. We're done about half of that move here so far. So it does kind of seem like ES could push towards 6,400 here a little bit. Here's a question for the team. If you have a candle that has volume, right? So like we have on yesterday's daily standard or yesterday's daily bar, how do you, like, what are the two ways that you can invalidate that candle? So what are the two ways that today you could invalidate it? What do you think? Yeah, so if we can see exactly those two things that are spot on, Ajay and Kiki, right? So it's we hold or we break out right above yesterday's high a day, right? Or we establish a larger volume profile, right, than what we got there yesterday. This morning, right, because we're gapping up, we're gapping up well above yesterday's high of day. What we're going to want to see, right, is basically if this can turn into support, right? So if we can now see a pullback sustain here this morning, fake out basically above this blue line, like that 354 area, and like kind of close back above, maybe a bounce off of 350. But if we can see that zone turn into support here today, that then establishes us, right, to be able to push back up. And then at the very least, then we have a range bound condition, right, between here and here, which would be a really good range for us to trade with. Or, right, if we do get that reversal, we've got the range to trade from effectively here to here. That makes sense? So today we're just going to say above 350, right, for the fake out, see if that holds. And then bigger volume, if it happens, right, would be fantastico. We're at 63.70 here pre-market. So we're looking 63.50 as maybe downside starting point here, and then going from there. Okay. NQ, maybe a little bit, again, kind of like a little bit of a shakeout, fake out. If we stack up the last 2 days here back to back, right? Kind of maybe like just indecision, right? And we're opening up in the middle of that indecision here effectively, or in like the middle of our 2-day range. So realistically, ES probably looks like the smoother trade here, right? If I'm judging it based on the information we have right now. And again, signs of early failure here from NQ, but not as obvious as ES, right? So the thing on NQ here that stands out is that it couldn't break and hold under 200, right? The little shakeout and fake out. If these bears were actually as strong as they're suggesting, why haven't they been able to hold under that area? And then again on the open, if bears are as strong as that volume is suggesting, why are we seeing that 200, right? Not even like attempt really to break down through that zone. So I think that continues to be a key spot. Yesterday as well, right? If we're looking at price action on the shorter time frames, that 200 barrier was effectively where we saw that first kind of element of capitulation. So we've seen that move effectively now be given out, right? And we'd argue that maybe that's like a capitulation type bottom wick. Maybe we are able to get up to that, like that 377, and then kind of go like red to green type breakout. I would say that this is a little bit more challenging to be bullish on here this morning. So I'm not going to have a bullish plan on NQ just because of how long it's going to take for me to get there, right? So it's not to say that it can't happen, but that for me would be a better setup for like a power hour or a little bit later on in the day. So if we have downside action, I'd rather look for those rejection fake outs on NQ. And then if we have like a bullish kind of grind day, I would rather that on ES. Yeah. So I'm in the process of kind of like back testing that a little bit, AJ. Maybe not this weekend because I've got some plans this weekend, but yeah, hopefully by like maybe mid next week, I'll have all that data kind of put together. It's something that would have played out there yesterday. We'll keep an eye on it today. Maybe it'd be something I would try with like a micro or something, but we'll cross that bridge when we get to it. Okay. And then we're looking, and we're 22.8 there, so that'd be a big move. Okay. CL. So red candle, increasing volume, gap down, 3 for 3 here to the downside. Not exactly the world's strongest 3 for 3, I would say. Something maybe about this that isn't like perfect, right? Same thing we talked about there with NQ. If that volume is actually so strong, why couldn't it hold under those lows? Like that's a little bit of a concern, right? Same thing here, pre-market, kind of like a little bit of a fake out lower. You know, we've kind of seen it bounce off of this range here before. So maybe the 65 could be a short-term area of support. Again, probably not the strongest indication from markets in general of like a trending bit of price action. I think this is probably still a bigger sign of consolidation than it is of continuation. So, I mean, I think the market, yeah, I feel like the market is telling me to slow down here a little bit today, truth be told. We would still be looking to the downside here. So 64.50. I'm going to say 65, but no, 64.50 is going to be our starting point. And then 5% from there, right, is kind of what our limit is. 5% on crude's nothing these days, too. It's crazy. We'll be looking at like a 250 as like our final point there. All right. Apple inside bar. Tesla 3 for 3 going into earnings, or sorry, 2 out of 3 with volume going into earnings. And that could very much be like why the market feels like it's slowing down, right? Because we are kind of creeping up into a lot more earnings season stuff. 2 out of 3 to the downside without volume here. Amazon 1 for 3. Nvidia 2 out of 3 to the downside with volume, right? This looks like a stronger, more exaggerated version of NQ. AMD weak, 2 out of 3 with volume. Okay, Meta 1 for 3. I did that the long way around. All right, Netflix 2 out of 3 without volume. Google going into earnings here today. 2 out of 3 without volume. All right, perfect. How's everyone feeling today? Fantastic. Okay, so let's check NQ here. Okay, so NQ, this would have been our theoretically our signal here to get that 65-point move lower, right? So this would have been our confirmation. The entry here would be like a retest, right, of the opening range, and then targeting the purple line. That's effectively what the base idea is. Your stop loss then would be at high of day, so that's what I'm testing. Just give you a bit more information. And generally ranges are a little bit smaller than this. So generally the range we see on the 1 minute time frame is kind of like 20 to 25 points. So that's why it would be potentially interesting, right? To be aggressive with it, is it would allow you to do your sizing. We had that, mean reversion idea we talked about 4 months ago, maybe 3 months ago. And it was a really strong setup trigger, but it didn't give us very consistent position sizing. And it created scenarios where if you had a loss, losses had the potential to be catastrophic, at least catastrophic from prop firm terms. So I think that was a really good strategy, but it wasn't a very prop friendly strategy. I think that would have been, yeah, like that would have been a better one. Back institutionally when you have effectively unlimited money. So this is maybe something that gives us like a similar concept or a similar variant, but with consistently tighter position sizing, which I would very much appreciate. Yeah, Paul, I'm doing well. Thanks for asking. Yeah, power hour is approximately the last hour of the day. I would probably call it like a power 90 minutes. So kind of like the last 90 minutes and the first 90 minutes are generally where you see the most enthusiasm. So then this here, right, would be your entry. And your stop or your entry price here or target would be 159. Yeah, I'm just gonna paper trade this, guys. I can do it on this actually. May as well test it. So stop 264. Limit price 223. Take profit 159. Again, guys, this is just a test. Sorry. just to see what it's like, right, operationally. Hey, good morning, Mike. Hey, good work, Jared. Green is green. Thank you, Kiki. Yeah. Not enough coffee yet here this morning. So far, no interest here in anything. It just looks like indecision everywhere, right? So far, or relatively unenthusiastic price action everywhere so far. So effectively just the same idea as this yesterday here, right? Breakdown, look for a pullback and go. I mean, obviously not a real trade, but that's the base idea. Just the 10 min, that was the 10 min mean reversal ding. I would say probably not a strong enough candle. Hey, no worries, Michael. If you have any questions or you're stuck on something, right, don't hesitate to reach out. And so far, this would have been a great play. Okay, maybe we have a chance here for the indexes to start to crack a little bit, maybe under some of this pressure. We're kind of right back to that 200 area of support on NQ, right, which has been the point of interest we kind of talked about there a lot here pre-market. So the thing that we want to watch here, right, is kind of the same thing we had yesterday, right, on NQ. When it made that crack through 200, it did so aggressively yesterday, right? We want to make sure that we're seeing a similar level of aggression here. Now on ES, on this 3-min, didn't quite close under the confirmation low. And then on NQ here, right, we still got a little bit of space to break down. So not a huge rush yet. So maybe these will set up on the 5-min. Maybe a little bit slower than I expected here so far this AM. Maybe we've expected just a little bit more enthusiasm. So we're watching ES because it's probably the more likely setup here so far. You just see a bit more oomph from a volume perspective. Okay, NQ creeping up to 200. Okay, there's that 200 first breakdown attempt on NQ. Yeah, we also have ES here, guys. So this is going to be more my focus here for now. Right, we've got an ES breakdown here. It's setting up right away. Aggressive entry technique. Stop loss would be 365. That might be going too fast now. Just flushing without me. And this is going to hit that handle in a second. Already have the profit target set, right? On the 1-min time frame. So you're looking at a 160-ish. Yesterday I talked about a pattern I noticed, right? So basically when you get that clean breakdown on the first 1-min candle post the opening range get established, you tend to get a very high probability of a one handle move or of a 65-point move from the low of the opening range. So I just did a paper trade to basically test that thesis, see what it feels like, see how it behaves. So that's what this is here. It's just a paper trade testing that idea as I'm going through the back test. And so the entry target was a retest of the opening range. So that green box. And then your exit price here is that 159. Just the plan or exactly what I'm back testing. Okay, so it's like about 50 seconds to go here. Kind of feels a little bit of deja vu to yesterday. A little bit. Good morning, Rusty. I'd like to see these this candle close stronger. That doesn't feel like a very strong candle close. Okay, same thing there with ES. Not a very strong close post confirmation. So yeah, still being patient here. Nothing is particularly setting up yet. CL may be giving us an opportunity for a bearish engulfing candle, bearish engulfing on volume. Or ES, sorry, has enough volume. It's got the wrong candle shape here at the moment. Same thing here with NQ. All within 3 points of our target, or what would have been our target. So we need to see this close stronger, as close to like 59 as possible, really. Okay, let's see. A little bit of a better close. Still feels a little bit like deja vu. Rude, bearish engulfing candle, not bearish engulfing on volume. So I have a good setup here, but no confirmation. Maybe that 3 min will give me that breakdown I'm looking for here. But base expectation here today, right, is we kind of, the impulse was, I said, that the market is feeling as if it's trying to make me slow down a little bit here. Don't think I've got a different sensation than that here yet. Again, not increasing volume, so can't do anything with that. Inside bar, ooh, that might work, yeah. Well, inside breezy on the 3. Yeah, Timmy. So, interesting question. To be honest, it's kind of like or at least my understanding of it is it was just kind of how things were priced on the futures exchange there for a long time. So basically, it's just a. I mean, let's be a bit more precise here. So it's a combination of the implied volatility, right, of what can happen in like a say 30-minute time frame, right, and it's a yeah, it's just a pricing mechanism that was used right when trading initially on exchanges. So it kind of just became one of those things that then became adopted right by a lot of traders. So it became popular. Kind of the same way like how um like VWAP, for example, right, is used by a lot of traders. So sometimes it can be worth putting information into. Or um or like whatever, right? So it's just kind of one of those things where it's been adopted by a lot of people, and then um, that like initial estimation, right, was based on like an implied volatility, based on what the move is doing. So like a 65-point move, right, on a 23,000 point security isn't super significant, and so it kind of just chunks it down just a little bit more. Where I kind of first became aware of that concept, what was in a book by Leo Melamed, called Man of the Futures, where he talks about yeah, like turning the CME into a powerhouse, and he talked about handles in that book quite a lot. And so yeah, all this, John, this is just a paper trade. I'm testing or practicing or learning a new strategy here. Effectively, all the pattern is when you get a clean breakout of the opening range here on the 1 min time frame. So i.e. when the second candle of the day gives you a textbook breakout through the opening range, you want to look for a retest of it and then target a move that's 65 points away. That's effectively what the strategy is. So that's a very like rudimentary version of it, because like I said, I'm just back testing it and I'm kind of stress testing it. I don't have a full set of rules, but that's the basic pattern that this is an example of here. When it's live, guys, or if it passes the smell test, I'll obviously make you guys all documentation and a video and try to code it up into something. So just bear with me, but it does take a little bit of time to test things. Saw a good opportunity to test it here in the stream, so I decided to take that. Again, just a paper trade, right? It's not real money. I'm not even particularly managing this aggressively. I have a take profit set, I have a stop loss set, and it's just which one happens first. Okay, CL again, not a great volume, but a compromised candle shape. Again, hard to be super enthusiastic here yet. The other, I'm sure a lot of you guys know of Anthony Crudeli and Pax, and like they're old school CME pit traders, and so Pax, he trades a variant of the opening range, but he trades it on the 32nd, and that's effectively how he's picking his targets too. He's looking for moves in handles. So, I mean, the reality here about trading, there's very few original ideas. There's nothing new in the markets. So you just learn from people who are more profitable than you and improve your skill set. That's pretty much it. Yeah, we've got a chance. At this point, though, I'd like to see a breakdown here under low of day because that's where we've seen resistance step in here so far, right? So I need to see a breakdown basically through that fake out low. Otherwise, I have to map out my target to that area because I've seen price action stall there so far. So I would love to pretend that that resistance doesn't exist, but I don't think I can in this situation. Not when my base expectation is still chalk today, right? We were being sold the narrative of we're waiting for something, right? Which makes sense going into earnings season here in earnest. So for me, I think it's reasonable to be pretty super picky. Like it's got to be absolutely perfect here today. Otherwise, I'm not interested. We're not seeing a ton of movement from our leading names either, right? They all look relatively range bound. There's a few exceptions, but not by like a lot. Excuse me. So yeah, probably still expecting things to be a little bit slow still. Not even 10 a.m. So we got lots of time. The other thing we've seen here, right? When markets do slow down in this context, we tend to get like the move of the day kind of happens like say 10:20 to 11 a.m. kind of like in that time frame where you almost like shake out that weakness, you exhaust that initial attempt, and then you clear out a bit of the move. So for now, I think it's still worth being pretty cautious here until we get a clear sign of conviction. Yeah, the market data here at 10 should also or could create a catalyst for us as well. I'm not super convinced it will, but who knows? What happened, Rusty? Ooh, I was 2 points away again. And decreasing volume though, right? As we're testing those lows, not fantastic. Should have been my take profit. Okay, there we go. It executed. So nice little win that would have been, right? 13.25. Sweet. And yeah, pretty much exactly what we thought was going to happen happened with that, right? Clean breakdown through, retest, one handle move. Pretty simple, I think. Now, not an ideal. It's not like this trade is not perfect because we got in 25 approximately, right? Stop loss of 62. So you're risking, let's say 40 points, right, to make 65. Risk reward on that, maybe a little bit shitty. So don't have enough information on what the implied win rate is to know if that would be a justifiable risk reward. So the $1,300, right? It's a nice number, but it doesn't necessarily tell the full picture, right? fair. Yeah, if you get 40 points quickly and you're in a couple contracts, that's a good size win. You gotta just take it and run. So the just to finish my train of thought here, right? The thing to back test here is twofold, right? So one, average range size, right? So AKA average stop loss size. Average win should always be the same. Huh, got big bag eyes. I like that. And then time to trade and max drawdown, right? So those are probably the other elements that need to be accounted for. This trade took pretty much 30 minutes here this morning. Again, I think based on like the eye test is sort of what it would expect. But I've mentioned my desire, I guess, to see if I can improve my win rate right on the first trade of the day. This is kind of the love child of that idea. We'll see if we can make it work. But promising, right? Promising first paper trade. I don't know if I can call that a reversal on ES. I don't think it's enough volume. NQ maybe has chance, but I have less enthusiasm to be bullish on NQ here today. I haven't seen anything that really invalidates my plan to not really want to be short. The market has a little bit of maybe some like baggage to get through here still. I guess the other thing to I'm just thinking out loud here. Sorry guys, I'm using today's trading session a little bit to solve future problems or future questions. The thing that just came up into my head, right, on trades where the range is more than 25 points, right? Maybe the rule then becomes to trade it with micros and to keep that sizing consistent there at that like 500. This is TradingView. You want all that information on which platform and all that kind of stuff, then go through the Start Here channel in the Discord. It'll walk you through how to set up all those things. Yeah, every 1 point is $50, Mike. Yeah. NQ maybe here on this 5-min could be giving me a little something something. $70 to $54. Okay, so you're within distance here, still being able to use the aggressive. But that's an increasing volume breakdown under low of day. You could also still use the pullback entry technique here, which would mean a stop loss of 183 approximately. I'd like to see just this thing slow down just for a second here. So far, I have not seen any like it's not been a slow pullback here. It's kind of been elevator up. That's a little bit better. Yeah, that's a much better reaction. So And you'd be looking stop loss 182. And, you know, ideally reference price here looking like 170-ish. So watching here carefully. And I'm just watching the speed of this pullback, right? Okay, any day now here. Okay, so now it would have to be the aggressive technique, right? Which would be a stop loss of 178. Is doable, but I don't like how quickly it faked out and how quickly it pulled back. Like if I saw that post entry, I would say that that's a failure, right? I for sure would say that that's a failed trade. Again, maybe this is behaving more like a reversal than it is a breakdown. I'm going to get increasing volume there. Not going to get increasing on the 10. And yeah, good decision, right? To have avoided that NQ breakdown. That would have just stopped us out at the high of our confirmation. Again, right? That little instant fake out lower and then instant pullback, not a good sign, right? That's not what you want to see if you're bearish. Yeah, Rusty, I kind of felt the same way after the winning streak, right? So like after those 27 days of like being really green and feeling like I was crushing the market from a P&L perspective, it almost feels like small wins aren't worth it. It sounds so stupid because that's how you stack up that consistency to begin with. I think it's just like as things become a smaller and smaller proportion of like your P&L, they feel less significant. And so it be like mentally maybe becomes a little bit looser around that, then you don't care as much. I think it is like a little bit of ego. Like you need a certain number for it to be worth it. That I think is a limiting belief more than anything else. I don't think that that's actually a great way to trade. But yeah, I would for sure agree. I think in general, right, once you start to trade, you have like a pretty good run of form. There's always this like, I don't know, asshole on your shoulder that tries to get you to do things that you weren't doing during your win streak, right? or during your good period. So there's like, oh, like go bigger sizing now, or hold for bigger wins now, or look for a different setup trigger, or like it feels easier to want to listen to that devil on your shoulder. So what you're doing right now is the right thing. Basically acknowledge that that's your bias, right? Be aware of it. Study what you think triggers that number effectively, and then make a plan on how you can manage that guy more effectively. We all have that person on our shoulders, or that trader influencing us. So we got to learn how to shut them off or shut them off. All right, 1 second, team. I'm just gonna go fill up my cup of coffee. Be right back. All right, we're back. Yeah, so it's looking for some sort of increasing outlier volume, right? Confirmation standard. Let's go, Rusty. Well deserved. Sounds like another vacation paid for with prop firm profits. Hard to complain about that, man. Enjoy. Quite the run here you're on. Getting lots of payouts, getting Masters tickets, going on holiday. Like, geez, man, good things come in threes, clearly. Let's go. 3,100. Congratulations. Absolutely, Rusty. Absolutely. I mean, you've been, not to get sentimental here, but you've been with DTR for like almost 5 years. So pretty incredible progress in that time, man. Yeah, still have to be pretty patient here. Not much going on yet. Paper trade might have been the move of the day. Some increasing volume would be, a welcome sight here. I don't think we're going to get it on the 3. On NQ, yes, but trade that to the upside, I don't think. Oh, nice and slow so far. Remember, team, right? We're traders. So that means that fundamentally we get paid for our decisions, not our time. Sometimes the market's going to move without giving us a clear interpretation of our rules. And yeah, we could probably try to chase something and power our way through and overtrade and hope we get lucky. But I don't know about you guys, but when I get caught in that feedback loop, I tend to hate myself after. Like I hate the way it makes me feel as a trader. So I'd rather just sit on hands, be patient, not waste any money, not waste any energy. Basically, what I'm suggesting, right, is that when markets don't follow your rules and you're still willing to be aggressive and you're still willing to place trades and you're still willing to do whatever, and you go from being a trader to being a gambler, right? You go from thinking that, hey, okay, well, my system's not in play, maybe my intuition can take over. And that's no different than saying it's going to be red or black or to hit on 15 or to do whatever, right? You're making a gut call, not really anything that's based on like any perceived system. And so when the logic behind making a decision is random and the outcome is random, right, effectively, then it becomes really challenging to notice what you're doing well or what you're doing wrong as a trader because the decisions that you're making are coming from an irrational place, not a rational one. They're coming from an emotionally driven decision versus a logically driven decision. And it's much more difficult, right, to replicate emotional triggers when backtesting or studying or replicating than it is to replicate logical or technical decisions. So for now, I might be a little bit of, or might be a little bit shit out of luck in getting a ton of action here today. But again, kind of expected that here based on what we saw pre-market. We kind of expected it to maybe be a little bit slower. So it's kind of a weird sensation. It's like I'm kind of correct, but I'm like I didn't want to be correct on this. You know what I mean? Like it's important to be able to call out chop days, but calling out a chop day correctly, kind of a disappointment. Did anyone else try the paper trade alongside with me? Or is that just a view and watch type scenario for most people? Let's go. I appreciate the bravery. But does it kind of make sense, guys? Do you guys understand kind of what the thesis is there? So, like, what's different about that setup specifically is it doesn't really use volume confirmation. Right, so it uses just a breakout as confirmation. So it's pretty simple. It's a pretty simple setup. All we're looking for here is basically opening range gets established, and then is the first move outside of it. So is the second candle of the day um a breakout through the opening range, or is it a fake out? If it's a breakout, then base expectation is that it's going to then make a 65-point move to the downside or to the upside. If it's a fake out, it's no scenario. So here yesterday, same example, right? Clear breakout through gives you 65 points. Here, clear breakout through on the first 1 min candle of the day gives you that 65 points. Here, right, second candle of the day is an inside bar, so no trade. Here, right, fake out lower, so no trade for, or like first candle, right? Here, first candle of the day, clean breakout gives you that 65 points. Here, clean breakout, right, holds under those lows, gives you that 65 points. So it's literally that. That's just the exact pattern. Like it's like the Uggs of trading setups. Like it's a little bit of a basic bitch. So there's no, it's not super complicated, right? Yeah, I would like to back test it more to basically make sure I'm not missing anything. But from just like a basic pattern perspective, it does look very promising. I mean, I'll probably back test it. Like realistically, at least all of 2025, that'll be the starting point. So the entry technique here would be a little bit different based relative to the aggressive or pullback, because your stop loss would be the high of the opening range, right? So, or the low of the opening range, depending on the stop loss. So it would be a pullback entry, right? But it wouldn't be like in the same way that we do the pullback entry right now. Oh no, don't apologize to me. It's fine. So yeah, it would be the same, like same concept. Really, like the idea here is, yeah, entry low of opening range if you're short, right, or high of opening range if you're long, and then stop loss at high or low of the range. No trades here yet today, John. It's been a pretty slow session so far. We've mostly just been talking about like a strategy that we did a little stress test of here this morning, but that's it. Yeah, like realistically, probably the things to build out, right, would just be entry logic, right? Because like I said on this trade here on the 1 min, obviously it was a trade that worked out, but we're risking 40 points to make 65, right? Which is not a tremendous risk reward ratio. So we might need to manufacture better risk rewards, right? So if we just do it this way, right, this could still effectively be it. And then in this circumstance here today, right, wouldn't have gone an entry, but would have been within that 25 points. Um, So that's a little bit of like a multifaceted question, market miner. So, what win rate for the strategy would make it worth it? Would it be anything over 15 or 50%? Sorry. So, I would say it would probably need to be a basic implied win rate larger than 50%. It would have to be significantly larger than 50%. So I would say like base expectation would be hoping that it's in like the 70 to 80% range of giving you that type of follow through. The reason why is because stress tests and back tests rarely are like tit for tat, right? So if I could get 60% implied win rate on a stress test with a 3-to-1 risk reward, then that would be matching or outperforming what I'm able to do historically on the opening range, which would then um, make it worth it, right? So there's two elements that you're looking at to define that worth it element. One, is it actually possible, right, to be able to get an edge? And then two, is it outperforming what you have here at the moment? Well, for now, yes, Rajat. That's just the pattern I've noticed, right? So, um, based on those rules, like that's like the two benchmarks, if you want to call it that. So those for now aren't going to change on NQ. Again, getting more information, back testing it, filling in those details, you can start to make maybe different inferences. But short term, the pattern is clean breakout through on the 1 min gives you a 65-point move. So that's the thesis. You want to now see if that thesis is correct or not with the back test and stress test. Yeah. If the opening range is higher than 65 points, it would be less than one R. I mean, today, right, we're risking 40 points to make 65. A bit less, risking like 38 to make 65. So not quite 2-to-1, it's kind of like 1.6-to-1. It's okay, but probably not enough margin for error there. I would have preferred a tighter entry for sure. Again, I know we all probably have a ton of questions about this. I have a ton of questions about it too. That's why I got to back test it, right? So I don't know the answers to a lot of these things here yet because I don't have that information. I haven't been able to collect it. So gotta bear with me here for a little bit. All I have is just the borders colored in, right? Or like the corners of the puzzle made. So still missing a lot of information. So that's just gonna take a bit of time. Yeah, I mean 75% win rate. I don't know, maybe not possible. We'll have to see. But yeah, if I could, if the most basic iteration of executing it before applying an execution edge is within striking distance, right, of how I'm currently trading, then there would be no reason not to add it in. If it doesn't get within those striking distances, right, then it's not there. The other thing I also want to focus or stress, guys, right, that new isn't always better. Just because you see a pattern doesn't mean you're necessarily going to trade it or you're going to use it long term. But naturally, you're gonna see things that the market's going to give you some like warm and fuzzy feelings, and yeah, it's worth exploring them, right? Yeah, so ORB, yeah, opening range breakout, that's what it stands for. I don't know what TTM squeezes. Honestly, Mike, you've been in here for a while now. Like you've seen me trade. Like I trade this way every single day. I don't do anything outside of this. Yeah, like it's big volume, and then it just fails, right? Or like it just gives you not just like a bullshit variant of it. Like we're further on in the session, still relatively choppy and bouncy, pretty much everywhere. Like very range bound conditions here today. A few exceptions for sure, but not a super enthusiastic session yet. Uh, like I think we have to maintain like a reasonable amount of context here. Like I think we kind of already lived that dream to a certain extent, market miner, right? We spend 90 minutes a day, we'll say on average, right? Kind of watching the market, maybe a little bit more, maybe like 2 hours a day on average, kind of watching the market. And then we have the rest of the day to do whatever we want. So I'd say we're already pretty close to there. You know, the other reality is that yeah, like every time I try to make fast money or quick money, I tend to get in a hole. So like I don't know. I don't want to get too aggressive. And even a CL move to the upside if it wants to break out there, it's not appealing to me. Yeah, we're just missing the outlier volume. Like it's good, not great. I need I need greatness. Sounds super egotistical. But I think there's a lot of it feels a little bit trappy here. Feels a little bit trappy. Yeah, 100% AJ. And yesterday was an awesome day too, right? Like, if I don't get another trade for the rest of the week, it's been an awesome week. Again, sometimes we have to remind ourselves we get paid for our decisions, not our time. And that's easier said than done sometimes, but every now and then, like getting a day where the market doesn't give you any trades kind of is like a little bit of a short-term dopamine detox, which I think can also be a pretty powerful thing. Like taking a break from the roller coaster sometimes and just watching it do its loop-de-loops can be kind of refreshing sometimes. And maybe there's a little bit of like a subconscious element here today to it as well, because I think that after like a big day, it's easiest to want to like press again and have another big day the following day. And it's really easy to like let all those profits slip away and like not really give yourself a chance to compound. But yeah, I don't know. But you guys, maybe not like, yeah, not a super productive trading day, but that stress test gave me a lot of ideas and gave me a lot of stuff that I want to test out, which I think is really positive. That pretty much came together absolutely perfectly. Price hasn't really moved down or away, right, from that one handle move. It's kind of just been hanging out there the whole time. I don't feel like I've missed out on too much. I also feel like I've learned a decent amount today, which that's a win. Any day you learn something, that's a win. Yeah. I'm just hanging out here, team. I mean, obviously things could change here a little bit in the next, 20 minutes, but I don't, not feeling like it's a super high probability trade day here at the moment. I'm also probably not expecting a ton more volume showing up. Kind of feels like the market is just waiting for earnings here on a few tickers, right? So like we got Tesla today, we got Google here later today as well. Yeah, I would have been yesterday too. I mean, I didn't stress test it yesterday, but like I test when I was or when I found the pattern on Monday night, it was like maybe 80% both directions combined in the last like maybe month or so. So I test for sure looked very promising. Stress test today looked really promising. So maybe I'll have a bit of time to be able to pull it off. I got a bit of a busy weekend here, unfortunately, this weekend, so no time for trading stuff that I normally have time for, but that'll be all right. CL again, I would like to see it break down under lows, right? That for me is the main issue. Or just in the middle of its breakdown range. So getting a move down towards like 77 or that 80 handle, not super likely. Like we've just seen it stall right here already. Why would it not stall again? Like what's changed, right, to suggest that it wouldn't stall again? I even think maybe even like a little bit mentally right now, like the market's almost like, I want to say put me to sleep, but it's not like not been interesting enough to like to get like that zone of focus or like that intensity of focus that you sometimes need. Kind of feels like a little bit of a casual day, pajama Friday or something like that. So yeah, team, I don't think I'm going to place another trade. Like I don't think I'm going to place a trade, I should say. Things don't seem they don't seem perfect. I don't think I can talk myself into anything. And just hearing myself talk out loud kind of sounded like yeah, I'm ready for a coffee and a sauna. Hey, well done today, Spira. $3,100 back to back days. Let's go. Yeah, any questions here, team? Anything you guys want to go over? Like I said, I think I'm not gonna mentally commit to anything here. I don't think I have an edge today. Sounds good, Mike. Have fun. Yeah, sounds good. Let me know what you find. But obviously, like, yeah, so just go back to one comment there, right? The holy grail of trading is you get one trade a day, it's 80% win rate, and your average win is 3 times bigger than your average loss. That's the holy grail of trading. So I don't know if it exists. I'm skeptical that it does, but if we do get that type of look, We're gonna have to guard that with our lives. That's gonna be pretty precious information. And yeah, it does look like a consolidation here, Tony. I think we kind of nailed it in our pre-market. But that's the way it goes sometimes. Well, yeah, and you know what, Patrick? It's not that we didn't not take any trades. All we did here today was just followed our rules. Nah, I mean it's I'm saying guard it like because there's all the conspiracy theories about the Holy Grail, right? So there's like this church in Ethiopia where it allegedly is being held, and the priest who gets appointed to guard it, he's the only person who's allowed to see it, and no one else is allowed to. And this person always mysteriously dies. So obviously, I'm sounding a little bit too much like some of the obscure guests on Joe Rogan, but that's what I kind of meant by it. We're gonna have to be, keepers of the Holy Grail type thing. Yeah, exactly. Yeah. So we're gonna have to protect that with our lives. Yeah, exactly. So that's all where it really came from. Like the reality here, guys, is like the reason I don't really care about sharing my edge here is because trading as a retail trader versus trading as like an institutional trader is so different, right? Like the liquidity that I need and to be able to trade with, to be able to make money is so much less than what's required from like an institutional investor. So even if I had 20,000 people in here trading the same way that I'm trading, taking the exact same position sizing, taking the exact same plays as me, I'd still be using less liquidity than I'd be using when I was working institutionally. So what that fundamentally means is that I'm playing kind of like a little bit of a different game versus what a bank or a hedge fund or someone else is taking advantage of. The moves that we're able to capture with the size that is relevant to us don't move the needle for like my ex-employer, for example, right? 65 points with one contract, like dude, that covers 5 seconds of commissions. So like it's a totally different type of game. Interesting. Again, we need to get under previous low of day, right? That's where it would have to crack. Um, yes and no, market miner, right? Yes and no. If too many people trade the same idea, that doesn't work as well. But if too many people are in the same trade, you don't get any sellers, right? And so you can kind of just get like a grindier type price action, which people will declare as decay, or it'll just like things will take longer. Maybe is a better way of describing it. No, Sonia. So I don't generally set like a take profit in my order window. I'm not doing that, right? So my profit target is my white line when I map out a trade. So let's say I was playing a trade here to the upside, right? It would just be targeting high of day, right? So my profit target would be 264. When I use that fib tool, then it always tells me that my risk reward ratio here is justifiable to accomplish that profit target. So I'm not actually setting anything there inside the order window. Just in this example, right? So it's just uh I'm trying to justify my trade to 264, but I'm not setting that as a firm profit target. I'm going to judge that from a candle to candle perspective. In the example that we took here today, the paper trade I took here today, I did set a firm profit target because I wanted to make sure that if I hit my 65 points, that I'm back testing that I got out. So that spits out for me something that I'm specifically testing towards. So in this circumstance, I wanted to make it a binary, either profit target or stop loss. So in this context, it was a little bit just for testing purposes. It made it more convenient to do so, and it allowed me to monitor the market without having to monitor my position while still being able to replicate my back test. So I apologize if that made it a little bit confusing here. Maybe that's something that we will use going forward, but today was a little bit of an exception to how I normally manage my trades. Like for sure, this was a much easier thing, and if that's the case, right, all you're doing is you're going, okay, buy 190, stop loss here, take profit there, buy, right, and that's all you'd be doing. So it wouldn't change anything. It wouldn't change anything of the math. We'll make sure that the math is taken care of with our risk reward ratios and with our position sizing rules. So we'll make sure that any like we'll call it thought process that needs to be put into something is done on the front end, i.e. Like based on the rules that we're going to need to get into general engagement. Generally, I want to make sure that we can keep things as smooth and consistent as possible. Again, just a paper trade there, guys, just to illustrate a point. Look, I'm an idiot too, right? Like I'm, believe it or not, like I didn't do grade 12 math. Like I don't want to necessarily do a ton of math in my life. So yeah, the easier it is to replicate, and the easier it is to remove like technical stressors, right? And instead focus on things intra-trade that maybe give you anxiety or understanding or listening to what your like emotional triggers are. The reality here, right, is that setup triggers can be simple. Simple doesn't mean easy, and yeah, like I think the simpler a setup trigger is, generally easier it is to isolate emotional triggers. Like if my setup is okay, Jim Cramer's got to say that it's a generational buying opportunity, so I know it's a great short, and then I have to get this candle, and the indicator has to be this reading, and I need to get this volume profile, and I need this position sizing and that position sizing and all this kind of stuff. All of a sudden, now I've got 20,000 variables that I'm trying to put into the correct order, and it's super easy to skip a step. Once I skip a step, now anxiety comes in because subconsciously I feel like I'm missing something. And so it becomes harder to pinpoint, right? So that's kind of historically why I've done increasing outlier volume as my standard, right? I've made that a consistent confirmation standard across the board because I can turn that into a muscle memory, right? It's either has to be those two things, and it becomes a binary, which simplifies my analysis intraday, which allows me to keep more mental capital. Sometimes some days better than other, but that's really the process behind that, right? So I want things to be as straightforward in my mind as possible. And the more straightforward they are, I generally think the more repeatable the concept is. Oh, 100%. Yeah, market miner, great way to phrase it. I never get smarter once I'm in a trade or near a trade. I think that's absolutely it. I tend to get dumber. I don't need much help with that generally. So, yeah, I think that's a really good way of phrasing it. I've never quite seen it that way. I really like that a lot. Yeah. Again, like simple and repeatable doesn't necessarily mean it's easy. And we, like I said, we're playing a different game than hedge funds and institutions. So we can take advantage of kind of those simple, easy concepts because the liquidity required for us to make money is so different, right? So that's why I laugh I always laugh when people say market makers are hunting their stop losses or someone's whatever. Like, no, dude, like the shark isn't going after the plankton. Like every now and then, maybe there'll be some lateral damage, right? Where a plankton gets caught in with some fish, but they're not hunting for you. Like we don't move the needle. Like you guys would be shocked at the amount of commissions that hedge funds and banks or that hedge funds pay to banks or to like their clearing broker. You would be shocked at the prices. You'd be shocked at the cost of market data of like being co-located close to the exchange or having a server next to the exchange. We're talking hundreds of millions of dollars in operating costs. So our little, let's say, cumulative 500 contract position, yeah, we're keeping the lights on for 30 seconds, of them hunting our stop loss. So it really isn't that. Makes me laugh every time. All right, guys. Any other questions here? Any other questions? Yeah, well, Ajay, we're gonna need about 10,000 more people willing to pay 10,000 a month, and all of a sudden, now we can start to negotiate. So we got a little bit more alpha generation to do before we're starting to pool our capital here like that. Um, So the way that I would like the way that it was done, at least at the firm that I worked at, that's the only one I can really give you a good example of, because I got to see that process in a lot of detail. But what they effectively had was quants who were just constantly coming up with or like finding patterns or finding like um yeah, like little things that they could take advantage of. Generally, though, it'd be more like big picture type stuff, right? So it would be like, okay, when we get earnings, let's say like really good tech earnings, what does that do for financials, or what does that do for miners, or what does that do for other tech names that are lagging, right, from an earnings perspective, and then seeing basically where the like the differences between previous examples and seeing if there's like new patterns that have been created. Once those have effectively been launched, or once they've noticed like a new trigger, they would deploy a like automated demo trader that would be used to basically benchmark against the current trading performance, right? So let's say that they found a pattern like we talked about there on that 1 min, and they're willing to trade it. They would run it in the background for maybe 6 months, up to 18 months, depending on the time frame that they were testing. And they would see, okay, is this outperforming or underperforming our current benchmarks? If they had certain elements of overperformance and like a shorter term time frame, then they would potentially push things to live more aggressively, and then those would become signals that we would trade more often there inside. But generally it would be constantly hundreds of ideas being tested in the background on like multiple simulated variants, and then seeing which ones worked best. And then once an idea got pushed to live, or a concept got pushed to live, what we had here effectively would be like a signal strength type thing. So on the corner of our like trading platform, we called it Tyburn. There would be a list of all the active signals, and we had like a strength weighting multiplier on them. So it almost be like here, like on my where I have my watch list, I would have the 1,000 or 500 or 200 or 10,000 algo based signals that were currently in a live market environment. And there would be a market or a weighting to them, or a portfolio weighting to them. And they would all be optimized to work together to create what would be considered the optimal portfolio based on all those individual calculations. So the math behind that way beyond my comprehension, or my skill level, but that would be generally how they did it. Again, if they saw uh like significant performance increases in one or the other, maybe they would increase the weighting, or they would increase the risk tolerance, right, that it was willing to take, or things along those lines. But that was generally the process. The quants in general were incentivized to come up with a lot of strategies, or a lot of basic signals to trade, because they got a percentage of those profits. So they all owned a percentage of the algorithm that they generated. And obviously, the better and more signals that they had, the more money under management those algorithms were basically deploying, or the signals were generating, and the larger commissions that they would get effectively for that inside their bonus pool. So yeah, over the course of a week, you'd probably get 25 to maybe 50 new ideas getting tested, or starting getting tested. Let's say approximately 2 ideas per quant per week, something along those lines. And then the actual hit rate of tests, honestly, who the fuck knows? I didn't get access to that information. So yeah, I wouldn't be able to tell you how many of them actually got deployed to live, but yeah, you'd always be talking with the quants, and they'd always be saying, "Hey, we expect this to happen. We expect that to happen. Let me know." Stuff like that. And so that was effectively how I would learn the strategy, right? Or learned like what these guys were looking for. It's because you'd have, okay, we're deploying this to live. We're expecting this to happen. Watch out for this. And then you have enough of those conversations, and you start to piece things together. Tell you what though, like sometimes yeah, like you'd see these quants, they join the company, and then after a year, it's like they'd look like they were lotto winners. I remember talking to a guy. After 6 months, his first algo went live, and then like 3 months after that, he bought a house in cash in Mayfair, which is like one of the most expensive bougie areas in London. So like in 3 months, he made a couple million. Oh my god. What am I doing on the execution desk? Oh my god. And it's not to say that I was underpaid, but oh man, those guys were printing cash. Different world. All right. Final call for questions here. Another day down memory lane. Oh, for sure. Yeah. I mean, look, back then, like my pay package, at least by the end of my time there, was very significant. So no real complaints about that. It took me a long time being self-employed to make more than that. Um, but like hours, man, working there were terrible. You'd do 80 hours a week. You have to respond to emails 24 hours a day. Uh, yeah, like it was a good job. It was really fun. You learned a lot. But man, did it burn you out. Just the intensity required. Yeah, and like the company culture that was established there was like very much an all or nothing. Like it was very, very ruthless. I think that was ultimately the most exhausting thing. Like if you weren't on Team Air Rain or Team G Research, it was kind of like fuck you. Like the amount of times I saw, guys get offered roles at different companies, get promotions right at different companies, and then like the conversation like a month later on the desk being like people betting how long he's going to last at that job before he gets fired, stuff like that. um so if you're part of the family, you're part of the team, they treated you really well, and they made it really difficult to leave and to quit and to like get out of that life. But yeah, like it was crazy. Like even still, like they still got some of my money hostage. So like the way that they did it is you had a bonus, right? You got a bonus, you got paid out in April every year. And if you were a top performer, they would put a percentage of your bonus back into the fund, and then that money would vest after X amount of years. So uh, once the money was vesting, you'd be able to get that cash in like either January or December, right? Kind of just a bit like either early January, late December, kind of end of year. So you got your bonus in April, then they'd lock up between say 50 to 80% of your bonus, put it back into the fund, and then you'd be able to unlock that capital, not not the following December, but the one after that, right? So like the one a year and a half later. And so when you quit, or when I quit, you have to give up a lot of that bonus capital. They vest it, so they don't give it to you right away. Um, so like I had to like my last year in the fund, I had to walk away from like 300 and something thousand pounds, something along those lines. That was aside in the bonus pool that I couldn't get access to. Now I'm gonna get access to that money pretty soon. Actually, it vests after 10 years, so I've got 3 more years of waiting to get access to that. But they like make it really hard for you to quit, right? Like it was really scary saying no to that. Or saying that I don't want that now and waiting the 10 years. I don't know if that's how all firms work, but big hedge funds and big family funds for sure. Because it's a way for them of doing talent retention, right? Is it's going to be too expensive for you to quit. And so top performers stay there and grow. Now, like I'm sounding like I'm complaining. I'm not. I just chose a different life. Had I been there and had I continued to work there, and I would have been, say, on year 13 of my career at this company, I'm sure that the money that would have been put into my bonus pool on a yearly basis right now would have been probably like 2 to 3 million pounds tax free. And I would get that much each December, each January, probably an extra 500K each April. And then, 3 to 400,000 pounds is like a base salary. So like I would have been making a tremendous amount of money, but living in Guernsey, working 80 hours a week, and probably burnt out as fuck. No, 100% Sonia. Yeah, I mean that's why I quit pretty much, right? I mean, big part of why I quit. But yeah, you saw the people who went down that path and who were committed to that life, and they were super rich, but on like wife number 3, stuff like that. It's like, I don't know if that's the life I want. All right. Any questions here? All right, team. Well, Sandy, like always, right? If you have any questions, hit me up outside of market hours. I'll do my best to get back to you as soon as I can. But have yourselves a tremendous rest of the afternoon. Looking forward to catching up with a few of you here in our one-on-ones later today. And then hopefully back to a normal, traditional, busier trading day than what we had here. But you know what? I think I learned something here today, so I don't have too many complaints. Got a few new ideas. So again, don't have too many complaints there. And yeah, let's see how things kind of shape up here for the rest of the week. So have yourselves a great day, team, and I'll see y'all tomorrow. Peace.